Dad Dan Phillips bought this unit on the outskirts of Hobart last year, just as interest rates started climbing.
By the time I moved in, I'd had more letters about rate rises than I'd had months living in the property, which was pretty confronting.
Within months, his variable interest rate jumped from under 2% to almost 5%. Dan had no choice but to cut back all his expenses to afford his repayments.
A pretty tidy little spreadsheet with a bit of budgeting on there. Always looking for specials and that kind of thing, cutting coupons.
The National Debt Helpline has seen a 28% jump in calls for help in January compared to the same time last year. And that could rise when around 880,000 low fixed-rate loans move on to more expensive variable rates.
A lot of people I'm speaking to, their cost of their housing has now exceeded 30%, which is putting them into severe financial hardship and sacrificing bills and other expenses like medical expenses to make their mortgage repayments.
If you're in that boat, experts say to get on the front foot with your lender. After asking for the lowest rate possible or trying to refinance, Professor Kathy Walsh says there are a couple of key things you can do if you've built up equity in your home.
You've currently got a 25-year mortgage, you push it out to a 30-year mortgage. That will give you a bit more breathing space and reduce your mortgage repayments. You might be able to go to an interest-only payment.
Remember, you have a legal right to ask for assistance if you're having trouble paying your mortgage temporarily. Just ring your lender and ask to speak to their financial hardship team. You may be able to arrange a pause or reduction in repayments or to get your fees waived.
You've got more options if you get in quickly and talk to them about what you can do than if you wait till you've missed payments.
I think a lot of people we've been speaking to have actually been middle income earners that are struggling to pay their mortgage.
A financial counsellor can help you budget and looks at ways to manage your overall debt. One of the last resort options is using your retirement savings.
Accessing your super early is very difficult, and so one of the options is under compassionate grounds, which is when your house is on the verge of being repossessed. So legal action would really have to have started for that to be possible, and then you'd have to go through the process of applying through the ATO.
Finally, if you get really stuck, it's better to sell your own home than let the bank repossess it.
You'll get a better price, and it's expensive to have your house repossessed. There are fees, legal fees, court fees that the bank doesn't want to pay for, so that will come out of your pocket.
So plan, get ahead to put yourself in the best financial position.